We now have Deepak Ballani, Director General of ISMA, now joining us. Mr. Ballani, thank you so much for taking your time out here and joining us here on ET Now. But first up, I wanted to get your thoughts on ethanol prices. There are several reports which suggest that ethanol prices are about to be increased and the government might take a decision anytime soon. But nothing really has come through. What are your expectations, and do you expect the government to actually go ahead and increase ethanol prices?
Afternoon. See, as you know, the ethanol prices have not been corrected for last almost 2 years now. And there has been an increase in FRP. And we have always seen in past that government increased the ethanol rate whenever there was a FRP increase. In fact, giving you a background, very recent background, due to the conducive policies, we have achieved almost 18% blending in December 24. And very soon we'll be also achieving 20% blending mandate, much ahead of its original target because of the very pivotal role the government has played in the success of the ethanol program, which also shows in their programs, in their schemes and the announcements. But however, we have seen that this was not increased. We have requested the government to kindly look into the increase in the input cost, specifically on the FRP and the conversion cost, and correct the prices. We are still very certain that the government will soon revise the prices of ethanol, both all from all the feedstock, sugar feedstock, specifically from juice, B heavy and C heavy. And we are expecting that announcement to be done very soon.
Increase is the industry seeking?
Yeah, we are basically, there is a formula. See, almost 5 times whenever the price was corrected, there was a formula which was used by the government. Using the same formula, we have requested the government to increase the juice price to around 71 rupees, followed by B heavy to around 66 rupees, and C to around 56.5 rupees.
How much have raw material prices risen? So SAP and FRP, how much has the increase been since over the last, say, 1 or 2 years?
See, last year it was increased from 325 to 340. Before that, it was 310. So there has been a substantial increase in the FRP in both SAP.
Okay, so raw material prices have increased substantially, and as far as exports are concerned, government recently permitted exports of about 10 lakh tons. Do you expect this cap to be extended to 20 lakh tons?
So there is no discussion on increasing the cap. See, we had in December requested the government to announce 10 lakh tons of exports. And we are happy that the government has announced it. And we are also seeing the effect of this in terms of the percentage increase in the cane payment. We have also seen the domestic prices have stabilized. You all know that in November, December, we have our mills have sold the price sugar at a very low price, much below the cost of production. However, the announcement to export, which originally we thought was expected, is one is that it has stabilized the market. So we have seen that it has done really good to the industry. So we are not expecting any announcement of further exports as of now. I think we are happy with 10 lakh tons. Let's do these exports and look at the crop numbers. ISMA will be also issuing its second advance estimate on 31st of January for the production figures. I think perhaps later it could be, depending on the crop, could be thought. But as of now, we are not discussing any further. We are basically making sure that the 10 lakh ton export is happening as soon as possible.
You're not expecting any relaxation as far as exports are concerned, but also wanted your thoughts on the inventory situation currently in the domestic market. With the exports now being allowed, do you think there is any problem with respect to domestic retail sugar inventory situation?
No, absolutely not. We don't think we have any problem of sugar balance. See, we opened the season with almost 80 lakh tons in October. And considering that we will have reasonably okay, lesser than the last year production, but reasonably okay production, I think, and domestic consumption of around 280 lakh tons, I think we have sufficient sugar in the country, and there's absolutely no need to worry about it. And we have also seen the average retail price almost flat. We've also seen the wholesale price also being quite okay. If you compare the inflation of the sugar with other commodities, sugar is way less than any other commodity. So I don't think there's any need to worry about it.
There's no need to worry about the domestic inventory situation, that's the word coming in. But apart from that, since budget is also around the corner and because the government recently relaxed restrictions on export, do you expect any export subsidy to come in for export of sugar?
There's absolutely no discussion on that. I don't think we have the same scenario which was there a few years earlier. I think that is something which is not in discussion, and we don't expect any specific export subsidy to come in.
Not expect any export subsidy. And as far as we did talk about FRP prices and SAP prices, but do you expect them to inch higher in the next, say, 6 to 8 months on account of political considerations?
See, as far as the FRP and SAP is concerned, we are always in favor of uh, higher cane payments. But at the same time, we have been requesting the government that whenever there is an increase in FRP, there has to be a corresponding increase in both MSP and the ethanol rate. I think that formula and linkage is very important. So I think that perhaps is something which government has to relook, specifically on the MSP and also on the ethanol. Whenever there is an increase in FRP, SAP, there has to be a corresponding increase as per the formula.
Understood. So you're seeking increase in ethanol prices as per the formula basis the increase in raw material prices that we are seeing. And as far as international prices are concerned, how are they as compared to domestic prices? And is it lucrative enough for sugar mills to actually export versus selling in the domestic market?
See, today, as per the scenario, today we are London March is trading at around $508, and which in terms of parity comes to around 41,500 per ton. I think, and the refined is trading at 51508 plus around $30 premium, which is itself I think a good parity. Initially, when the export was announced, there was some reaction. We saw the global market going southward, but after the global market has digested that 1 million ton is not a very big quantity to be exported, and as of now we don't have any other sugar in the global market except Indian sugar. So I believe there is a parity and it is viable for the mills to export. Maharashtra, I think for the mills in Maharashtra, Karnataka, I think it is more viable. They can export their own physical quota.
Last question, as far as the minimum sugar price, minimum selling price on sugar is concerned, it has not been revised for the last 3 to 4 years. Do you expect any revision over there?
Yeah, absolutely. See, it was way back revised in 2019 when it was increased to 31. And before that, it was 29. And we saw in November, December that the Maharashtra and Karnataka mills were selling sugar at almost 32, 33 rupees, which is way below the cost of production. And that is where the need of the minimum support prices required. We have been requesting the government that you use the same formula and the same calculation which was used earlier in 2 occasions and revise the price to around 39 rupees. We are hoping that the government will look at this very soon and revise the MSP so that we don't have the similar situation in future, which we actually saw in December and November.
Mr. Ballani, thank you so much for taking your time out and helping us understand what the expectations are from the government and what's the picture looking like as far as the sugar industry is concerned. But shifting focus from...
If you like this video, then like, share and subscribe to ET Now.